Kroger, ticker KR, is one of the fastest growing supermarkets right now. The company in 2022 made $148 billion in total sales. They cover 35 states, 44 distribution centers, pharmacies, gas stations, and they had 5.5 billion combined stores and online visits. Despite being smaller than Walmart, this company is surely moving its pieces. Besides being a profitable company, Kroger knows that it needs to impact the world other than just selling products. 40% of the food produced goes to waste each year, while 1 in 8 Americans struggle with hunger. This is why Kroger has the Zero Hunger, Zero Waste Impact Plan, where they donate over 60 million meals to communities in need while reducing their own waste by 82%. While all of this is running, Kroger provides a return to its shareholders, and also the company is massively expanding, which we will get into soon. Year to date, the company has been mostly flat, jumping between $49 to $44 per share. Over the history of the company, it has done remarkably well, having its usual up and down, but overall over 4,000% up. The revenue has consistently grown over the years, currently up 4.36% in the 10-year mark. It is a slow pace, but the consistency of achieving this year after year for a supermarket is okay. Hopefully, this will be higher in the future. The same story goes to the EBITDA, consistently growing slightly at a faster pace than the revenue. Now in the net income is when we start to see some slowdown. Since 2018, we have seen some outliers, but overall, we can clearly see a downtrend. Having a company that is investing for expansion and having a declining income, it means that it will have a declining free cash flow. This could scare investors away, as having a declining free cash flow means lower dividend increases and less buyback. Overall, less return to the shareholder, but this is not the case here. Kroger's free cash flow is down because it is acquiring albertsons companies. The following chart is the investment thesis provided by Kroger itself. So looking at the columns from left to right, in the top part, we have what Kroger is doing standalone, and at the bottom, we have Kroger plus albertsons. The first column will be strong business with growth opportunities. Everything doubles here, except for the digital businesses. So we got stores, sales, brand businesses doubling. Pretty sure that as time goes on, Kroger will fully update the new locations with the old location capabilities, meaning that the digital businesses, for example, could increase higher than the projected number. On the second column, we have a proven value creation model. Kroger states that they will bring 8 to 11% total shareholder return in the first 4 years post-deal close. Also, Kroger stated that the share repurchase program has been stopped in order to focus on this deal, but during this period, value will be created through the increase of dividends and the effect of reducing net debt. Keep in mind that these numbers are not 100% promise. Kroger management does not have a magic ball, but at the same time, they know their business more than us. On the third column, we have a strong balance sheet and resilient free cash flow. So a better standing of the free cash flow, which could allow the company to continue investing, expanding, and bringing more value to the shareholders. Remember that as an investor, we invest that the company will make more cash flow in the future. So having Kroger making this big acquisition and having its free cash flow recover will call the attention of investors. So what are my takeaways with Kroger? Starting with the good, it is predictable. The nature of the supermarket business is very predictable, so the returns they usually mention are pretty accurate. The predictability goes in hand with the second point, innovation. By having an app, Kroger gathers tons of data from its customers, which unlocks buying patterns and trends information that Kroger could use for the business cyclicality. The innovation not only brings data to Kroger, but also brings values to the customer. Kroger could push individual deals based on the customer's grocery shopping habits. Add to the equation that Kroger also offers a membership where you can get better deals and accumulate points for gas as an example. To put this into a perspective, for me, Kroger is in between Walmart and Costco in terms of business model. Think about it. You do not need a membership to shop there. You can get access to supermarket, gas stations, and pharmacies. However, if you get the membership, which has an annual fee, then you get extra perks as a customer. So that's why I position the company between the two giants. Last but not least, the management is fully focused on shareholder return, even during the acquisition process. Caring about your shareholders during a massive transaction just shows how well run the company is. Now, moving to the bad side, the company is kind of bringing low returns right now, and it could take some years for the company to back it up. Remember that the 8 to 11% is not guaranteed. However, due to the nature of the business, it is possible that we see those returns. So right now, the returns are low, but if the projections are right, then we will receive an S&P 500 return with a growing dividend. The other point would be any merger discrepancies. During the process of the transaction, anything can happen and can delay or even change any terms of the deal. Personally, I see more upside than downside here. The company is expanding, is growing shareholder value, is about to bring decent return, and despite whatever they do, they have the shareholder in the equation for the good. Right now, I'm showing you my position in Kroger. I currently own 15.79% shares, and this composes 5% of my portfolio. My average cost is $44.69. I've been buying Kroger in every dip. It is a low beta company, so it doesn't make any massive movements. So any downtrend, I always scoop up a share or two. At the current prices, I will be adding as it trends down. I do have other holdings that have a higher priority, like J&J and Hershey's, but definitely will keep an eye on Kroger as well. So that will be it for this video. Do you own Kroger or do you disagree with anything mentioned? Let me know in the comment section below. Thanks for watching, subscribe to follow my dividend journey, and I'll see you in the next one.